Good day, everyone. I hope you are having a great morning, guys. Today is first Monday of November. Let's start with the Euro US dollar chart. The market now is in a strong downtrend. The price on the 4-hour time frame made a lower low right there. The last impulsive downward trend leg followed by long bearish candles, long red candlesticks, and that means sellers are in control. If we see shallow retracements around this inside support, the price might stop and moves further down. If that happens, the next key level of support is right here. And if the price continues further down, it will reach that point there. On the flip side, if the price moves well into this resistance, it will find the previous swing high around 1.15. And if it surpasses it and moves further up, it will reach the 1.16. These are critical levels for the Euro US dollar, and it's better if you keep an eye on. And if you see reversal price action patterns, you can validate the signals and trade with a trend to the downside. Great British Pound versus the US dollar. The price is in a downtrend. It's hovering around this key level of support, and we do expect the sellers to continue pushing the price lower. Now, if the market makes it all the way down here and break and closes below this one, the next key level of support will be right there. But on the other hand, if the price moves deep into this red candle to fill up this fair value gap, the key level of resistance for the intraday trading will be right there. If the price breaks and closes above this one, then we will go all the way to this one here. The conclusion is that sterling is trending downwards, and we do expect the sellers to continue dominating this market. Australian dollar versus the US dollar. If you see the weekly chart, the price formed that gravestone reversal. There is noticeable gap here. On the 4-hour time frame, the market made higher highs and higher lows. That defined an uptrend, but right here the price made a lower low. We saw a couple of long bearish candlesticks, and that means the sellers are in control, and this can be the beginning of a new downtrend. So we do expect the price to continue further down. A break of this support will push the price lower to this key level of support, but in case something happened during the week and the price bounces off the support and moves upward, which is an unlikely scenario, the first key level of resistance will be the high of this swing point. So the Australian dollar, it's also more bearish than bullish, like the euro and like the sterling versus the US dollar. US dollar versus the Japanese yen. The price is in an uptrend, higher highs, followed by long bullish candlesticks with long green bodies. That means buyers are strong here. This is a consolidation pattern like the pennant, and if the price breaks above this descending trend line, we do expect to go all the way up and reach this 154.79 dollars. In case the price breaks above this first resistance, the next key level of resistance will be this one up there, which is 155.87. On the other hand, a push to the downside finds the first support right here, and that's a key level of support because it's the broken resistance, and now it turned into support, and also it's the middle of this bullish Morobozu candle. If we draw Fibonacci from this swing low to that swing high, we also see that at this area there is the 50% Fibonacci retracement, which can act as an additional support level. Price action reversals here on the lower time frames like 1 hour, 15-minute chart, we can use them to go long. This is the chart of gold. On the 4-hour time frame, the price failed to make lower lows last Thursday, but also it fails to break and close above this swing high. So the market is consolidating within this area. The best way to trade the gold now is to wait for a clear break above this 4-hour high or a clear break below this 4-hour low. If you want to trade swing, in case you are trading day trading, you need to look on the 15 minutes and 1 hour time frame for all this key level of resistance and support respectively, and to try and ride the trends within these areas. But from a broader perspective, if the price closes above this high, then it has a high chance to push all the way up to this level here, which is the 4,139. The US oil since last Thursday consolidates within this area. It has more bullish than bearish implications, but what you need to be aware is that the price on its way up, it formed all these green candles and it took about less than 10 4-hourly sessions. The consolidation, it's about double the time. That means the market lost its momentum to the upside. But to trade short, we need to wait for a close below this $59.8. On the other hand, if the price breaks above this rectangle, we can comfortably look for long positions with a key level of resistance being around the $63 per barrel. Platinum, it's very messy, still consolidates. There is a key level of support below this bullish engulfing low, a key level of resistance above this bullish engulfing high, and we need to see the candlesticks closing above the high or below the low before we start looking for any entries. Kuber, it's very similar to the Australian dollar. Actually, see the Australian dollar made a higher high and then a lower low here. Same with the Kuber, made a higher high and a lower low here. There is a key level of support where the last swing low is. If the price breaks and closes below this support, then it will move all the way down here. Natural gas, it's in a strong uptrend. Buyers stepped in for good. Every time the sellers tried to push to the downside with these bearish continuation candles, the buyers just reverse within one period. If the price closes above this resistance, the next key level will be around $4.95. But if the price enters a retracement phase, we have the first support here where it's the broken swing highs, and also the key level of support where the uptrend started around 3.77. Cryptocurrencies are susceptible to more bearish than bullish. The market was in a downtrend with these lower lows, retraced back within this order block area. It formed a double top here. That's a classic reversal pattern I can show you on the hourly time frame. The price after the retracement, it went up and failed on the first attempt, but the buyers tried to step in and they didn't manage to push beyond this swing high, and the price then collapsed. Great entries appeared within the downtrend continuation pattern. If the price breaks $106,400, it will go all the way down to $103,500. On the other hand, if the price finds support here and pushes to the upside, the key level of resistance is the $110,000 to $111,000. Ethereum is approaching a key level of support. Actually, that's a strong demand area around $3,660. If buyers will step in, the price will push to the upside, but there is a high chance to enter a deep retracement around the 61.8 Fibonacci percent, which is this level here. And if the sellers remain active, they will push the price all the way down to the demand. But if in any case the price closes below the demand area, the next key level of support will be the $3,500. On the other hand, the key resistance lies around $3,900, and the break above this one, which is an unlikely phenomenon to happen this week, can find the price to test the $4,000. Solana is very similar with Ethereum, is resting at the key level of support around $176, but I'm still very bearish on this one because the price is suspected to reach and not only stay but break and close below the $170. What do you think about that? Do you think the price will break and close below this one, or do you think it's going to bounce and push to the upside? XRP, very similar. If this breaks below this swing low, the price will push all the way down here. There is a free fall, to be honest, to the downside. What do you think is going to happen here? Do you think it's going to break below the 2.30, 2.37 and reach the 1.5, 1.4? Or do you think it's going to bounce to the upside? If it moves upward, the first key level of resistance will be the $2.7.